Have you ever thought that your lunch order could, actually predict the future of the economy? It sounds kind of dramatic, I know. But on one really shocking day in October, that's the exact question Wall Street started asking about millions of burrito bowls. We're talking about Chipotle, of course, and a sudden stock plunge that got absolutely everyone talking.
So get this. On October 30th, 2025, Chipotle releases its latest earnings report, and almost immediately, its stock just completely craters. We're talking a drop of as much as 19% in a single day. For a company that's been a Wall Street darling for years, this was a massive, massive shock to the system. So the big question is, why? Why did investors get so freaked out so fast? Was this really just about one bad quarter for one company? Or is the story of a struggling burrito chain actually a warning sign of something much, much bigger happening in the US economy? All right, let's get into it. Okay, so to really understand the panic, first we have to look at the hard data. I mean, these are the actual numbers that flashed across trader screens and sent the stock into a total freefall. Now, at first glance, you might look at this and think, hey, it's not so bad. Total revenue hit $3 billion, which is huge. But the numbers that really worried investors were these two: comp sales and traffic. See, comparable restaurant sales were almost totally flat, up just 0.3%. But the real kicker was traffic. That's the actual number of people walking in the door, which fell by almost a full percent. And that was for the third straight quarter. That's a trend, and it's not a good one. So what even are comparable sales, or comps? And why does Wall Street obsess over them so much? Well, think of it this way. It's how they measure the health of the existing stores. It ignores any growth that just comes from building new locations. So when that number is flat, or even worse, negative, it's a huge red flag that your core business is losing steam. And the other thing that was a really bad look, it was this pattern of, well, broken promises. Just look at this timeline. At the start of the year, Chipotle was promising pretty healthy growth. Then, come July, they walked that back to about flat. And then in October, they cut their forecast again, now saying they expected sales to be slightly down for the whole year. This kind of pattern just completely shatters investor confidence. All right, so we've established the numbers were bad, but here's where the story gets really fascinating. It's not just what happened, it's all about who is behind these numbers. And that brings us to a very specific group of customers. Right in the middle of the earnings call with all the analysts, Chipotle CEO Scott Boatwright said this. And I'm telling you, this is probably the single most important quote from this whole story. He didn't just vaguely blame the economy. He pointed to the exact demographic that's hitting the brakes: millennials and older Gen Z, and specifically those who are in that lower to middle income bracket. And we're not talking about some tiny little customer group here. Households earning under $100,000 a year, they make up a whopping 40% of Chipotle's sales. So when a core group that big starts coming around less often, yeah, the company is going to feel that immediately and intensely. Which, of course, leads us to the next most obvious question. Why? What's going on in the lives of these younger consumers that's making them skip their regular burrito bowl? And the answer really is a perfect storm of financial pressures. The CEO pointed directly to the restart of student loan repayments, which, as you can imagine, is a huge drain on people's extra cash. You add that to the fact that wage growth is barely keeping up with inflation and just general worries about the job market. Suddenly, that $10 lunch starts to feel like a luxury that you have to cut. So where are these customers going? You might think they're trading down to, say, McDonald's or Taco Bell, right? Well, according to the CEO, that's not what's happening. They're trading down to their own kitchens. As he put it, we're losing them to grocery and food at home. And that's a key detail, because it means the problem isn't the competition, it's just flat-out affordability. And this brings us to our final section, which is where this story gets so much bigger than just one company. This is where we have to ask, is Chipotle accidentally serving up an early warning for the entire US economy? This is what people call the canary in the coal mine theory. The idea is that since Chipotle is so incredibly popular with this key group of consumers, their spending habits basically act as a bellwether for everyone else. I mean, if they're pulling back on a pretty affordable treat like Chipotle, it probably signals they're cutting back on all sorts of other non-essential spending too. And Wall Street certainly seemed to think so. The fear was contagious. On the exact same day Chipotle's stock tanked, other similar fast casual chains got dragged right down with it. Sweetgreen dropped 6%. Cava fell 8%. all because of the worry that the slowdown Chipotle was seeing wasn't just a Chipotle problem, but an industry-wide one. An analyst for Morgan Stanley just perfectly captured the mood on Wall Street with this quote, calling the whole situation this season's Halloween scare. It just perfectly describes that sudden fear and uncertainty that gripped the entire sector. Everyone started wondering if a huge consumer spending slowdown was the monster hiding just around the corner. Which brings us all the way back to the beginning, doesn't it? The story of Chipotle's stock shock isn't just about financial reports and stock charts. It's about how these huge, abstract economic forces, inflation, student loans, wages, actually show up in our everyday lives, in our simple decisions. It really makes you ask yourself, the next time you decide between eating out or just cooking at home, are you only making a choice about lunch, or are you casting your own tiny vote on the health of the entire economy?